Wall Street has suffered some significant losses in just a short period of time in reaction to the Trump tariffs and some bounce backs when they were paused. And it might be hard to not want to make changes to your portfolio. Nolan, what is a terrible investment strategy when it comes to down markets?
A terrible investment strategy in down markets is selling or buying based upon emotions. I recently had somebody had come into the office and got together with them. And, when COVID was happening a couple of years ago, she had gotten really concerned about what was happening into the market. And her advisor had talked her into taking her money out of the market, moving it over into fixed income. And if we go back a couple of years ago, back in COVID, when interest rates were low, she was getting only like 2.5% in her fixed income accounts. And so here we are years later. She's now that much closer to retirement time, yet her fixed income part of her portfolio, which was a big part of, what she bought in that down market, never gave her the opportunity to come back when the market recovered in COVID. And it really wasn't here till recently, this tariff war, that we've got back to this emotional, concern that people have. So selling based upon emotions in the market is going to be another big costly mistake. What you want to do is you want to be realistic. With stocks down significantly, maybe from where their peak was a couple of months ago, maybe people are realizing that their risk tolerance wasn't, what they thought it was, especially when the markets come down. In our investment policy statements that we create for all of our clients, what we can do is we can show them within about a 95% confidence what would be the typical range of returns of their portfolio over a 6-month time frame. And so if you're listening and whether you're a client or not a client, if you don't have the investment policy statement, let's get together, and if you get a copy of your investment accounts to us, we can show you what would be the typical range of returns. Now, when you go through that exercise and you understand what your risk level is, if you're comfortable with that risk level, and let's say that your risk level is negative 10% and your accounts are only down 6, you really then shouldn't be in a panic environment because you're within those range of returns. You don't want to change your risk level based upon after something happens. You maybe want to make slight adjustments, but avoid making an emotional decision. And I think a big reason why people do that is, they can't control Wall Street. I can give you my opinion about what I think the market's going to do, but at the end of the day, I don't control what Wall Street does. And so investors will make a change to their portfolio because I believe that they feel that they're doing something, getting them a little bit back into control. But those decisions of, selling low can be costly. So you want to sell strategically. And selling strategically, you want to identify the specific purpose of what you own and why you own that. In our office here at Retirement Guys Formula, there's really 5 key elements that I like to look at when I look at stocks. I like to look at companies that are, cash rich, companies that are low debt, companies that have a high profit, companies that have a competitive advantage, and or companies that are needed on a daily basis. And so if I know exactly what I own, I would know when to strategically sell. So if I look at my companies on a monthly basis and I go through the analysis and maybe one of them has taken on a massive amount of debt, maybe their cash balance went down, that would be a reason why we would strategically sell. But if I look at those and I'm like, check, 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 they check all the boxes on the reason why we want to do that. But the market is panicking, meaning that other investors are just going into their 401k. They're not strategically selling. They're just selling the panic sell all button. That allows you to become a strategic buyer and buy things cautiously. And when you're looking at it, for the long-term investments in the stock market, they go up. And over the long term, if you're sitting on cash and or you're patiently waiting, there can be some good ways that you can get that money to grow. Cash over time is probably not going to keep up with inflation. History has shown that over time, the stocks can be the great way to kind of keep up with long-term inflation. The other thing, if you're not sure whether you should sell, whether you should buy, the other thing that you could always do is do nothing. Sometimes doing nothing And if this is the first time the market's tested your emotional aspect or your stomach for risk, history would tell you, and I will tell you, it's not going to be the last time we see this happen. Financial crises happen, pandemics happen, 9/11 happens, dot-com bubble bursts happen, housing markets happen, things happen, and you've got to be prepared for that. So just going in and making changes to your portfolio without a good thought process could be a costly mistake. You know, if you need to reach out to us, we're here. If you're not hearing from your advisor and you're, wondering what should I do, I want to help you avoid making that terrible strategy in a down market. I want to help guide you through this process. We can take a look at things, determine if there's some strategic moves to make into the portfolio, look at where there are some cautious opportunities, because volatility can create opportunity if you know what you own.
It's easy to say buy low, sell high, or to quote Warren Buffett, be fearful when others are being greedy, be greedy when others are being fearful. It makes sense on paper, but if you don't have any guidelines, guide rails along the way, when you're in it, it can be very difficult. That is when emotions take place, and that is when mistakes can take place. If you have a plan developed ahead of time, it can really help you know when those opportunities are, when the actual time is to make those moves, to buy, to sell, and not just on a whim and really proving costly and maybe finding yourself in a hole that you can't dig yourself out of. The team at America's Retirement Headquarters, they can help you develop that plan, maintain that plan to, through, and beyond your retirement. All you need to do to get started is reach out, set up a time to speak with them. Not going to cost you anything but your time, and it could be some invaluable time as far as your retirement goes. 419-794-3030 is the phone number. It's 419-794-3030. And, of course, you can always find them online, day and night, always available, arhq.com. I want to thank you so much for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys formula, America's Medicare Associates and Retirement Tax Partners. Please have a great week ahead of you. Stay safe out there. Nolan, like I said earlier, appreciate the time. And as we wrap up, I do want to leave you with a final word.
Yeah, everybody have a wonderful week. I appreciate you taking time to tune in with us, and we will be back same time, right here on Toledo's largest talk station, and of course your favorite media outlet. And just remember, when you think retirement, think America's Retirement Headquarters. We're here for your entire retirement.